welcome back my YouTube channel. This time we will discuss about how to find the best mortgage lender. So here we go, let's see the video. There's more to finding a mortgage lender than simply securing the lowest interest rate. Just as Elena Lovskina, professor of business administration at the University of Virginia's Station School of Business. If the consumer wants to be protected, else the education that's the most important thing, she told Investopedia recently. Lovskina spoke at length about what consumers need to know, what questions to ask, and how to find the best mortgage lender in the complicated and sometimes confusing world of home buying. Our ended conversation follows. Lenders come in many forms. Lovskina. The question is simple and complex at the same time. We have different actors implementing different parts of the value chain in the mortgage market. Some interact with borrowers directly, should ask a bank, mortgage broker, mortgage company, or an online portal like LendingTree. Other originate mortgage and yet thought to be the same or a different entity. For example, mortgage brokers do not originate mortgage. Different actors finance mortgage or profit the money that flows to the borrower. Then, there are actors that help mortgage owners balance sheet for the duration of the maturity of their debts, up to 30 years. Agents, for example, fulfill all these roles and hold interest with the borrower, originate the loan, finance the loan, and hold the mortgage till maturity. Or there could be a different entity for each role. For example, the process can start with a mortgage broker. Then go to a bank that originates the loans. This is the original lender. The bank may keep the loan on its balance sheet on sale if, say no Fannie Mae or Fair Deal makes, instead of a bank, the originator could be a financial or mortgage company that borrows money in a wholesale market or from other financial institutions and originates the mortgage. Investopedia Essentials. This is where the notion of what the lender is becomes very fuzzy. It is someone you're interested with to get your loans. It is someone who you notice it, as it's someone who initially funds it. This is where the functions changes. In Investopedia, I understand there can be different actors for each step. How can the consumer sort it all out? Lovskina, it is not clear to me why borrowers need to sort out all steps in a mortgage origination process. My mortgage, for example, was transferred between financial companies multiple times, yet I did not change my financial obligation. Borrowers need to focus on identifying credible agents, mining banks or mortgage brokers. It will offer them comfort and then focus on the best terms available to them. Problems with for enforcement and shadow banks. Investopedia, you wrote about the financial crisis and mentioned the history before the crisis of inconsistent enforcement of existing regulation. What is the status of inconsistent enforcement, and how does that compare to the problem of shadow banks? It seems part of this code impact customer and how they solve a for a lender. Lovskina, you definitely observe differences in regulatory exposure and enforcement between banks and financial corporations. Financial corporations do not carry deposit, and since they do not carry deposit and are not insured by the Federal Deposit Insurance Corporation or FDIC,